Hi Bénédicte, it's time to take stock of what is happening in the economy and on the stock markets. If we look back at last week, there were meetings in Japan, in the United States and in Europe of the central banks discussing the interest rates. Now, if we look at the Federal Reserve, what do we need to remember?
Well, the Fed dropped rates by 25 basis points to 4%. It's facing inflation of 3%. And it's also facing fog. Jerome Powell mentioned this, that when you're in the fog, you slow down. And so he's slowing down his easing projections. He's basically said that cutting rates in December is not a foregone conclusion. And the fog for him is from many different factors. It's from the shutdown, it's from the impact of tariffs on inflation, and other impacts like immigration and AI on the employment market. So we basically expect the Fed to not touch rates until 2026, and that's been our call for a while.
And what was the situation at the ECB?
Now for the ECB, it's a lot more clear. The ECB, 2.1% inflation. Markets are expecting rates to remain at 2%, and there was a no thrills kind of meeting, and we as well expect rates to remain at 2%.
Yes, because European economy is still holding on, whilst we know that there are some countries such as France or Belgium where there is political turmoil or where there are budgetary issues. How do you look at that situation? Is it unusual?
It was unusual for us to have 0.5 growth in GDP in France last week. It was a pleasant surprise. Now, obviously, that was linked to exports in the aerospace industry, but also consumption that held up not so bad, and investment as well. Will that carry on with the amount of uncertainty at the moment? I think it's going to be difficult for companies to project themselves, but we're definitely not projecting a recession in France, given the large amount of savings and also still the impact of the ECB cutting rates that comes into that is delayed. The impact is delayed when it hits the economy. So that's going to be a positive factor for companies. Now, the uncertainty around that, as soon as we have more information on the budget, I think the better.
Now let's look at the US, where the shutdown is continuing for over a month now, and the end does not seem near. I learned last month that the impact of a shutdown on the economy in the long run is not that big. Do you remain on that vision?
We do, but we know that it's going to get worse before it gets better. Analysts project that the impact on the economy will be approximately 1.5 in the so shave off 1.5 percentage points of GDP in the fourth quarter, but that should be temporary, and so we should have a boost in growth in Q1 once all these temporary shutdown impacts are over. The impact on the unemployment rates as well can be significant at the end of the year, but it should recover, and it explains part of markets' patience with regard to the shutdown, actually.
Yeah, you talk about market patience. I would say there's still a lot of optimism in the stock market. Meanwhile, results of the third quarter are coming in. How do you assess those results?
I mean, the current environment for markets at the moment, there was a lot of pessimism after Liberation Day, the impact of tariffs. That's being revised. The IMF as well has impacted. The impact of tariffs has not been the end of the world, as some economists have stated. So I think there's a little bit of a correction from that, and as well, results have been more resilient. Growth has been more resilient on the US front. And then you've got all the investments that are going into AI. And as you mentioned, so earnings reports have been positive. They've been also positive for the Magnificent Seven. And that's important for markets to see that the earnings are backing these high levels of valuation on the tech sector in general.
And how does this reflect in your investment strategy at this point in time?
So that's, of course, an important question. We, first off, remain invested in equity markets, and our optimism remains on the U.S. Economy, as well as emerging markets, given the weakness in the dollar, and maybe a little bit less optimism on Europe. We're more neutral.
That's all we have time for. Bénédicte, thank you very much.
Thank you.